Welcome back to Investing Talk Podcast.
Great to be here.
Today we're tackling a question that's definitely on a lot of investors' minds. Is Precigen stock a good time to buy right now?
Yeah, it's a really interesting one given the recent news flow.
Absolutely. And look, before we get into the weeds, if you find this analysis valuable, please do hit subscribe, like us, leave a comment. We really appreciate it.
Yeah, definitely helps us out.
And hey, if there's a specific company you want us to dig into, let us know in those comments below.
We're always looking for ideas.
So for Precigen, we've gathered insights from, recent financial filings, market data, analyst reports, trying to piece together a comprehensive picture.
Right, it's not just about the raw number.
Exactly. It's about understanding where the company stands, the hurdles they're facing, and, crucially, any potential catalysts on the horizon.
And sometimes the information seems, well, a bit conflicting.
That's our job, right. To navigate that, try to pull out the most important nuggets for you.
Okay.
Let's start with the foundation source, Precigen's core financial health, our first set of sources. Well, they paint a picture of a company still very much in development, facing some pretty big challenges.
Yeah, that's fair. The picture from, say, the Q2 2025 financials is, well, it shows the struggle.
How so?
Well, according to the condensed data for the quarter ending June 30, 2025, Precigen is still finding it tough to grow revenue while they're pushing their gene therapy pipeline forward.
And revenue was?
For the full fiscal year 2024, total revenue was only about $7.6 million, which, for a biotech at this stage is fairly modest.
Okay, modest revenue. What about profitability?
That's the key issue. Gross margins are still negative, and the company reported a net loss, around $67.3 million for fiscal year 2024.
$67 million loss. Wow.
Yeah, so ongoing unprofitability. And future earnings. Highly uncertain. It seems like everything really hinges on getting regulatory approval and then successfully commercializing their main candidate, PRGN 2012.
Given those losses, that number, my immediate thought goes to cash. How much runway do they actually have? What's the balance sheet look like?
That's the critical question, isn't it? Liquidity. So the latest balance sheet we saw from that Q2 2025 filing shows total liabilities of about $84.9 million against total assets of $94.6 million.
Okay, assets still outweigh liabilities, but
they do have some convertible debt, and maturing obligations are definitely putting pressure on their cash. As of June 30th, 2025, their cash equivalents, and restricted cash, it stood at just $26.5 million.
$26.5 million. That doesn't sound like a lot for a company burning through cash like that.
It's not. It suggests a pretty limited operating runway unless they raise more capital.
Right.
And the persistent negative operating cash flow reinforces that they'll likely need more financing.
Any signs of how they might get that?
Well, this is important. There was a recent S3 shelf registration. It covers up to 143.8 million shares for resale by existing holders.
Existing holders.
Right.
So not the company raising money.
Exactly. It's not for new company funding, which implies potential dilution for current shareholders without bringing cash into Precigen's coffers directly from this registration.
Okay. Dilution risk, tight cash. Where does Precigen actually fit in the market competitively with these financial realities? What makes them stand out?
Well, they're operating in really cutting-edge areas, gene therapy and synthetic biology. Their focus is specifically on rare and orphan diseases.
And PRGN 2012.
If that gets FDA approval, it could give them a first-mover advantage in recurrent respiratory papillomatosis. It's a serious unmet need.
Is there competition?
Oh, yeah, plenty of competition in gene therapies generally, but Precigen has its proprietary platforms like UltraCAR-T and specific gene delivery methods. That does give them some differentiation. They have their own tech angle.
Okay, so the fundamentals look challenging, maybe even precarious, based on that $26.5 million cash figure. Let's switch gears a bit. What about the stock chart? What's the recent price action and technical indicators telling us?
Right, the technical side. Over the past month, Precigen shares have been pretty volatile, trading between roughly $0.84 and $1.08.
Quite a range for a low-priced stock.
Definitely shows volatility. Key support seems to be holding near 80 cents, with resistance up around $1.10 to $1.20.
And volume?
Volume spiked quite a bit around those announcements, the S3 registration and the FDA priority review news. That signals heightened speculative interest for sure.
What about moving averages? Are we seeing any trends?
Yeah, the 50-day moving average is around 95 cents, but the 200-day is higher, around $1.20. With the price currently below both, that generally points to a bearish trend, both short and long term.
Any other indicators? RSI, MAD?
The Relative Strength Index, or RSI, is sitting around 42. That's maybe slightly oversold, but it's not giving a strong reversal signal yet. And the MACD indicator also remains negative.
So overall, the technical picture is kind of reflecting the uncertainty.
Pretty much. Volatility is high because of these big make-or-break regulatory events, combined with the ongoing questions about their capital structure.
Okay, that makes sense. Now, you mentioned the FDA priority review. That sounds like the biggest news. What else has been influencing the stock recently? Any analyst takes?
Yeah, that priority review for PRGN 2012 is absolutely the most significant near-term catalyst. The PDUFA date, the FDA's target decision date, is expected by August 27, 2025. That's a huge event horizon.
A binary outcome, essentially.
Very much so. But analyst coverage, it's been somewhat limited, and there have been some recent downgrades citing exactly these concerns, uncertainties around funding and the challenges of commercializing the product, even if it gets approved.
And that S3 registration probably didn't help sentiment either?
No, definitely not. That large potential secondary share sale adds to the dilution worries and weighs things down. We're also not seeing any recent insider buying.
Any selling?
There were some modest insider sales back in Q2 2025, but nothing that looked like, major leadership jumping ship. Just routine-looking sales, it seems.
And the buzz online?
Yeah.
Social media?
It's pretty mixed. Traders are laser-focused on that binary FDA outcome and, of course, the dilution risks. Lots of speculation.
Okay, so summing up that first perspective. Sounds like serious financial strain, maybe a very limited cash runway based on that $26 million figure, significant dilution risk hanging over the stock, and a cautious wait-and-see approach from analysts. Kind of bleak.
That's one way to read the data, absolutely.
But you mentioned other sources paint a notably different picture, highlighting positive momentum, recent developments. This is where it gets really interesting. What's been happening in just the last few months that gives a more, shall we say, optimistic view. Almost sounds like a different company.
It is striking how different the narrative can be. Looking at other reports covering recent events over the past 3 months, Precigen seems to have made some critical moves on financing, clinical progress, and regulatory milestones, setting the stage for potentially high-impact news.
Okay, like what specifically?
All right, so in September 2025, just recently, Adage Capital Partners significantly increased its stake in the company.
A big institutional player.
Exactly. That signals renewed institutional interest, potentially following the company's pipeline progress and, interestingly, a reported recent share price surge to over $4.
Whoa, wait. Over $4. We just talked about it trading between $0.84 and $1.08. That's a massive discrepancy.
It is, and that's one of the key conflicts in the data we're seeing. This source highlights that higher price point alongside the Adage investment. Also in September, Precigen reportedly secured a $125 million non-dilutive credit facility with Pharmacon Advisors.
Non-dilutive. That's huge. $125 million.
Right. It boosts the balance sheet significantly and signals much more financial flexibility than the earlier picture suggested. A big counterpoint.
Okay, what else? August.
In August 2025, this perspective notes the company actually beat consensus estimates in its Q2 report. They narrowed their losses, reported negative $0.11 per share versus negative $0.14 expected, and revenue was apparently above expectations too.
So an earnings beat, that would certainly help sentiment.
It provided momentum, yes. And their pipeline, especially PRGN 2012, moving through that priority FDA review, continues to get positive attention according to this view.
And July. Anything before that?
Yep. In July 2025, Precigen completed a preferred stock offering, raising $87.5 million.
Another big chunk of cash.
Correct. And this source combines that raise with year-end 2024 cash holdings of $97.9 million.
$97.9 million, not the $26.5 million from June.
Precisely. Based on this higher starting cash, plus the recent raises, this narrative has management announcing an extended cash runway into 2026.
Into 2026, that's completely different from the limited operating runway we heard about based on the Q2 filing figure.
It's a direct contradiction. It highlights how critical it is to know which data points and time frames a source is emphasizing.
Absolutely fascinating. Okay, so if we follow this more positive thread, impressive financial moves, institutional backing, management projecting a runway into 2026, what's on the horizon now. What should investors be watching in the next few months, besides just the PDUFA?
Looking ahead, based on this momentum view, expectations for the next quarter seem quite high. Key upcoming catalysts to watch would be the Q3 2025 earnings release, scheduled for October 15th. That'll be the next official update.
Right. See if the trend from Q2 continued.
Exactly. Then there's the institutional 13F filing deadline on October 31st. That could reveal if other institutions followed Adage Capital's lead.
See who else might be buying in it.
Makes sense. Then, maybe less direct but still relevant, the S&P Biotech ETF rebalancing on November 25th. Inclusion or weighting changes there can sometimes attract passive fund flows.
Okay.
And look for a preliminary Q4 business update, likely around December 15th.
Got it. Any rumors or speculation floating around in this more optimistic view?
Yeah, there's always chatter. Things like potential M&A interest or maybe a strategic partnership, especially if PRGN 2012 gets closer to approval or looks likely to succeed.
That often happens with promising biotechs.
It does. There's also talk the FDA might even expedite the review, though that's pure speculation. Or that Precigen could tap the remaining $25 million under that new credit facility for more non-dilutive cash if needed.
More flexibility there.
And of course, anticipation around potential announcements about expanding their pipeline beyond the current lead candidates keep the news flow going.
Okay, so let's try to bring this all together. What does this mean for you, the listener? We've basically heard two very different stories. Story one, serious financial trouble, maybe only months of cash left based on one filing, huge dilution risk. Story two, robust fundraising, big institutional buy-in, cash runway extended into 2026, key drug progressing well. It's like night and day.
It really is.
So how do you even begin to reconcile these views? What are the absolute key risks someone needs to consider when trying to decide if now is the time to buy Precigen?
That's the million-dollar question, maybe literally for investors here. Even taking the positive news into account, the primary risks are still very substantial. You can't ignore them. Number one, still dilution risk. That large S3 shelf registration exists regardless of the recent raises. It signals a potential overhang of shares that could come onto the market. And remember, the proceeds don't go to the company. Shareholders need to factor that in.
Okay, dilution is still a factor.
What else?
Regulatory risk. This is the big one. If PRGN 2012 fails to get FDA approval by that August 2025 date, it would be, well, materially detrimental as their own filings state. So much is riding on this single product right now.
Everything hinges on it.
Pretty much. And third, liquidity risk. Yes, they've raised capital according to the second narrative, extending the runway. But they are still burning cash with ongoing losses. If commercialization is slow or there are unexpected delays or costs, those reserves could still deplete faster than anticipated.
So even with the recent funding, the cash burn rate is still a concern.
It has to be monitored closely. The investment decision, really, it boils down almost entirely to your confidence in that FDA approval for PRGN 2012, and then their ability to finance the launch and actually sell it effectively. It's a high-stakes situation. Given all these moving parts, these conflicting financial pictures, the high-stakes catalysts, what's the overall takeaway? If an investor is sitting there right now trying to decide buy, sell, or hold, how should they process this?
Well, one source we looked at gives Precigen an overall rating of just 3 out of 10.
Ouch. Why so low?
It acknowledges the strength, that potential FDA decision, the unique pipeline tech, but it heavily emphasizes the weaknesses. The acute financial strain shown in some data, that extremely high dilution risk from the S3, uncertain analyst sentiment, and those bearish technical indicators we discussed.
So what's their conclusion?
Their take is that the stock seems best suited for short-term speculative trading around that binary PDUFA event, but not currently attractive for long-term investment because of the negative cash flow, the dilution risk, and the fact that they haven't proven they can execute commercially yet.
Okay, that's a pretty clear, albeit negative, stance. But what about the other perspective?
The other source, the one highlighting the recent positive developments, emphasizes things like robust capital access, strategic institutional accumulation from players like Adage, and those potential near-term regulatory milestones. These factors, they argue, are driving heightened volatility but also renewed investor focus.
So a more opportunistic view focused on the upside potential.
Exactly. Ultimately, the picture is just incredibly complex right now. You, as an investor, have to weigh the significant potential upside. A successful PRGN 2012 approval could be huge against these considerable financial and execution risks, especially when the basic facts, like the cash balance and recent share price, seem to be reported so differently depending on the source.
What really stands out to you after laying all this out, we've got this stark contrast: limited cash versus extended runway, bearish charts versus institutional buying, and a supposed price surge. It's genuinely puzzling.
The fundamental challenge, I think, is exactly that: reconciling these apparently contradictory data points. How can one report cite cash at $26.5 million as of June 30th, implying imminent financial stress, while another, looking at roughly the same period but maybe incorporating different funding events or start dates, claims a comfortable runway into 2026 based on nearly $100 million cash at year-end 2024 plus subsequent raises?
Right, and the share price discrepancy under $1.10 versus over $4 reported around the same time. How does that even happen?
It raises a massive question for any investor trying to do their homework. When you're faced with such starkly different snapshots of reality from different sources, how do you verify? How do you decide which narrative, which data point is more accurate or more relevant to your decision? What level of risk are you truly comfortable taking when the foundational information itself requires such intense scrutiny?
Exactly. It's a powerful reminder that being well-informed means digging deep, questioning sources, and understanding why information might differ. When even the basic numbers seem to disagree, it really forces you to think about your own risk tolerance and your investment thesis.
Couldn't agree more.
Well, thank you for walking us through this complex picture of Precigen. We hope this exploration helps all of you make more informed decisions.
I hope it was useful.
We'll be back soon with another analysis of the sources shaping the market. Thanks for listening to Investing Talk Podcast.